In 2021, one of the world's richest men paid more in taxes than the entire annual budget of some countries. But here's the thing nobody talks about. Most of it wasn't because of income. It was because of a completely different rule. We all think billionaires avoid taxes, and sometimes they do. But Elon Musk's story is weirder than that. It's not about hiding money, it's about how the tax system actually works when you're worth $300 billion but earn almost no salary. Most people get this totally wrong, and that confusion affects how you think about fairness, wealth, and what taxes actually do. First, let's destroy one idea. Elon doesn't get paid like you do. He doesn't have a $100 million salary. In fact, for years, his salary was basically zero. Around $50,000 a year, less than a doctor. So if he's not earning money, how does he pay taxes? The answer, he doesn't own cash, he owns stock. Specifically, he owns roughly 13% of Tesla. That's worth around $40 billion. And when you own something that goes up in value, that's called a gain, on paper. Here's where it gets interesting. In 2021, Elon decided to sell some Tesla stock. Not because he needed the money, because he was going to be forced to pay taxes anyway, and he wanted control over when and how much. The moment he sold, those gains became real money, and real money gets taxed. In 2021 and 2022 combined, he sold roughly $28 billion in Tesla stock. On that, he paid approximately $11 billion in federal taxes. That's a real number. He actually sent it to the U.S. government. To put that in perspective, $11 billion is more than the annual tax revenue of Iceland, Slovenia, and Cyprus combined. It's more than what most Fortune 500 companies pay in total taxes. It's also more than what roughly 25 million Americans pay in income tax each year. One person, 1 year, $11 billion. But here's what makes this story confusing. People see that number and assume the system is working. Others see it and assume he's still getting away with something. The truth is messier. Elon paid because he chose to sell stock. If he'd just held it and borrowed money against it instead, which is totally legal, he could have lived off billions without triggering any tax bill. He'd be richer and the government would get nothing. This isn't just a billionaire story. This is how wealth actually works. The richest people own assets, not salaries. Assets go up in value. That value doesn't get taxed until you sell. So they can borrow against their wealth, spend freely, and pay almost nothing in taxes, legally. Meanwhile, regular people with paychecks can't do that. You get taxed on income the moment it hits your account. No waiting, no choice. That's the real difference. Not that billionaires are criminals, but that the rules are completely different for people who own things versus people who work for money. Understanding this doesn't tell you if it's fair or unfair. It tells you how the system actually moves. And once you see how it moves, you see where the pressure is and how it could change. That's the only way to actually participate in these conversations. Most people talk about billionaires and taxes without understanding this one rule. Now you do. If you want to see how this same rule affects your taxes, or how other billionaires play it differently, like and subscribe to Mr. Big Money TV.